Today I will be explaining to you what is principle of banking and Basel accord. So let's start. So you all may be knowing what is bank. Bank generally accept deposit and lend loan. When they accept deposit they give certain amount of interest every month to the depositor and charge certain amount of interest from the person they give loan. The difference between these two interest rate is bank's income. That's how banks survive. Now let's see what are principles of banking. First principle is principle of liquidity. Principle of liquidity states that bank should always be able to pay pay the withdrawer the certain amount of money that he asks for without any problem. Second principle is principle of safety. Principle of safety states that bank should always keep the money and gold and property papers etc. of the depositor safe and secure in their lockers without any trouble. Next principle is principle of privacy. Bank should always be conscious about privacy of their customers, like their bank account number, their address, their phone number, their email address, all their personal data, the so that it cannot be misused by the people who do scams. So these were the banking principles. Now let's see what are Basel Accords. Basel Accords are the rules and regulations which are accepted by the banks around the globe. They were established in 1980s by Basel Committee of Banking Supervision, also known as BCBS. Their main aim was to ensure and strengthen the banking around the globe. Basel Accord consists of three main key frameworks. First one is Basel 1, second one is Basel 2, and third one is Basel 3. Now let's understand them. So now let's understand what is Basel Accords 1. Basel Accords 1 focused on settling minimum capital requirements for banks to cover their credit risk. They also introduced CRAR ratio, which means capital risk weighted asset ratio. It was 8%. Now let's see what is Basel 2. Now let's see what is Basel 2. Basel 2 consists of three main pillars. First one is minimum capital requirement for credit risk. Second one is reviewing of risk management. And third one is maintaining market discipline through greater transparency. These all may help banking, strengthening the banking all over the globe. Now let's see what is Basel 3. So now let's understand what is Basel 3. Basel 3 was formed in response to financial crisis in 2008. It says that it used capital buffers to minimize the losses during downturn. It also used leverage ratio. It also used liquidity standard with liquidity ratio. It all helped in minimizing losses during that financial crisis. So this was all about bank principles of banking and Basel Accords. I hope you liked the video and understood it very well. Thank you.